Okay, do you think that, and I'm sorry to put you on the spot here, but this is really what everyone's watching, at least what I'm watching. You think we set any more new highs here on the SPY? You think we've got the strength to maybe push us to a new range?
Well, that's certainly possible. I mean, it's the market, like we said, the markets. We've had tariffs. We've had the Fed confirming that they are not going to be as accommodative as we had thought, just 2 months ago or 3 months ago. And then, of course, like I said, this whole thing with the AI and questioning with the deep seek and whether this is going to be the kind of full, broad earnings growth that people were expecting from the AI phenomenon. So there's a lot of things been thrown at the market, and yet it's held up. So is it possible that it could push even higher? That's certainly a possibility. But I just, again, we're facing some headwinds right now. Mm-hmm. The market is expensive. Earnings estimates, are coming down. I just think those are the kind of headwinds that make it very, very difficult. And again, just going back to something we had talked about a couple of weeks ago with President Trump, he's even talked about it with the tariffs. Like, we might have to feel a little pain right now. I strongly believe that he's not worried so much about the stock market as much as he said in the past. That's a big report card on how his administration is doing. It's not important the first part of the year. And again, the starting point's a tough one where the market's so expensive. And in my opinion, I think he'd rather have the market reset lower and then start the report card ticking after that. So the thing is, the one last thing to say is we know that February tends to be a seasonally tough time for the marketplace. March tends to see a low. I still think that even though, again, if we push new highs and then the FOMO comes in, fear of missing out, especially institutional players, they've got to chase it if the market's going higher. But I just think that, after a 50% rally in 2 years and really almost 70% in 2.5 years or less than 2.5 years, we're getting ripe for a pullback sometime soon. So I think the line of least resistance is lower. And one of the key names could be Meta, which there's a lot of reasons to like Meta, and I like Meta. But it's up 15, now 16 days in a row. It's RSI chart, and it's getting up to above 80. That, no matter where it's going over the long term, it's getting ripe for a pullback soon. So that could be a trigger point or a catalyst for seeing the market pull back a little bit. So that's one I'll be watching closely all week long.
Okay, that's awesome. I actually would love to see that there on Meta. And one more thing regarding the seasonality stat that you just gave about February and then a bottom coming in March. This is actually a seasonality chart that one of the members of our happy hour group has been looking at. And this shows exactly what you were talking about. It shows the second half of February being weak into the first half of March with that bottom at some point being printed in March. So, Matt, really good stuff.